Hey, how you doing, everybody? It's Bruce here. Good morning, one and all from around the world. It's nice to see you here. Welcome,
Everybody.
to my
It's Bruce here.
viewers from Canada, the United States, Europe, um, the Caribbean, South America, Asia, and everywhere else you are. Thank you for being here, my Aussie friends and friends from New Zealand. The best, all of you. Best wishes to all of you around the world today. I hope it's going well for you. Staying healthy, I hope, and staying on top of what's happening in the markets. This is Stock Markets with Bruce, and we're here to talk about the stock market in plain English. Simple as that. Nothing fancy. We'll try to break down the complicated crap that you're hearing out there all the time and just trying to bring it down into just a simple way to understand what the heck is going on. Why is this happening to me? That's what we want to know. Thank you all for your continued support of this channel. Those of you who are members, subscribers, viewers, donators, everything. You guys are unbelievable. Thank you all for hanging out with yours truly Monday to Friday, twice a day, 8:30 Eastern time in the morning, 1 hour before we open, and 1 hour before we close at 3 o'clock Eastern time for the last hour of the day, as we try to kind of stay on top of what's happening in the marketplace. Today, we are September the 1st. This is it. We're here at September the 1st, 2021, the last quarter of the year, the last 4 months, I guess, September, October, November, December. And we'll see how this month kind of works out for us. At the moment, the Dow is doing okay. It's up 109 points this morning. In the futures, S&P is up 17 pre-market, and NASDAQ is up 59.5. Crude is up 20 cents a barrel, 68.70. There is just all kinds of speculation going on with market analysts and professionals. The interest rate specialists, the inflation people, the trading people, the manufacturing specialists, the real estate people, the IT folks, the fintech people, the software special. I mean, just go every sector of the economy, you name it. They're all wondering what is going on now, what's going to happen now, because the markets are pretty well at all-time record highs between the Dow, the S&P, and NASDAQ. They're just about there. Yesterday we had a down day, like, oh wow, we lost 5 points on the S&P. Oh no. Not an issue. It's incredible how high the markets are. And then it's not incredible how high the markets are, because markets trade basically overall on fundamentals. Sooner or later, it comes down to the fundamentals. But there are always outliers. But markets also trade on future expected fundamentals. And there is the secret sauce to this whole thingy that we're talking about with the market. What do you think the market, the economy is going to be like 6 months from now, a year from now? And what sectors of the economy will perform better in the next 6 months versus worse in the next 6 months? Who are your winners? Who are your losers? And by how much? And what could upset the apple cart for those predictions? And this is where inflation comes in, interest rates come in, unemployment comes in, trading barriers come in. It just goes on and on and on. Once I rolled Gamestop into January 22 at 250, can I roll into a more recent date of the stock fall? Yes, of course. That is the point. You want to roll into a 250, taking a nice fat premium if you can. The shares back off $15, $20 to the 200 range in the next week or so, or say next week they reach 185. You'll buy these back for way less than you sold them for. Now you can take a look at writing closer in contracts. Exactly. You're always writing. You're taking advantage of the swings. So sure, sell these calls for a nice premium, buy them back at half their price, and now look at writing your next one that has 2-3 week depreciation like this. Yes, this is the game. It never stops. Fascinating, fascinating, fascinating. I have 60 GameStop shares, average of 160. I use some money to enter the other positions. Is it still a good idea to buy 40 GameStop shares so I can write a covered call? I have to exit some other positions though. Well, Darwin, there's two ways you can do it. You can either exit other positions, get 40 more shares, and write a call. And you could write a January 250 or a 220 or a 240 and bring in a big premium, or write an April call and bring in a big premium. You could. You could also, if you have a margin account, you'd probably be allowed to buy your stock on margin. Get your 40 shares on margin. Turn around and write a big fat contract that'll bring in almost all that money, a good chunk of the money you've just borrowed, and now your margin is covered by the premium you just brought in, and that would be another way to go. How far out would you recommend selling SoFi puts in order to hopefully buy stock at a discount? Looking at 14's premium's not that great, but a month out. I'd go further out than that. Yeah, I would look out for January. I'd go way out. What you're looking for is right 14s or 15s, right 1750s for January. Take in as big a premium as you can get. Sit on that money. The stock runs to $16, $17 in the next 3 months. Anytime during that time frame, these put values will shrink, which means you buy them back for way less than you sold them for. There's your profit. The time is your friend, of course. Time will pay you as well, but make sure you get a premium. If you can write 15s, 14s, take a look at those, but go further out and bring in a nice premium. So you should be paid for this. Yes. Your thought on writing a put on GameStop at $150 for September 24, 2 contracts for $310, $620 contract premium. Now that I have 32 cash to cover. Well, if you're going to write a $150 call contract that expires in 3 weeks, that's not a lot of premium, but okay. You could do the same thing for October sometime, and maybe bring in $10 a contract and bring in a lot more money for your 32 grand. You could write this contract to January if you want, probably bring in a nice premium, and it'll be a better return. But I get it. Look, 3 weeks, $620, 3 weeks, but it's only 2% of your money. It's not a huge payoff for you because you were writing way out of the money put contract at 150. If you were writing a 150 put that goes until January, and you can bring in a nicer premium, that goes against the cost of your stock. I mean, you might want to consider that as an idea. Let me take a look at January put contracts right now, just for fun. A 150 will bring you $23. So you're only going to pay $117 for the stock. I mean, is that right? 127 for the stock. So you get $23 in cash now. You only have to come up with 127 a share on a 150 call, 150 put. I'd write those Januaries, and I'd take in $2,300 twice, $4,600 against your 32 grand. You don't need any more margin. You're using just as much. Bring in this big, fat, juicy premium. It's only 4 months. This is September. And if the shares go to 300 a share, these puts, they go down to $10, buy them back for 10. I like that instead. Will Cyxtera possibly pull in Q numbers like Amazon, AWS data centers do? That would be awesome as they pull in close to 10 billion per quarter. I'm not sure if Cyxtera is in the same exact business that you're describing that Amazon is, but they have now got 61 data centers that they're watching, server farms, and I think they're going to expand. I think that's the end game plan. Whether they merge with another company or acquire smaller operators, but I think they're just going to get larger and larger and larger, and that, I think it's the big picture for these guys. I kind of wonder if the day will come where they will acquire a privately run server farm company with 15 or 20 locations. I don't know. Then they need $1 billion to do it, and they'll just pick up the phone, call Wall Street, get $1 billion for 2% interest, 2.5%, pay cash for it, and just buy it up. And add dramatic cash flow to the company, tremendous earning power to the company, and the shares will just go up 50%, and then they'll do another deal and go up another 20%. They'll do another deal and go up another 20%. Just one after the other, after the other. I just kind of wonder if that's their plan long term. Regarding buying back a covered call to book some gains when the stock takes a breather, do you need the stock to go down past the price on the day you sold the covered call? Would it be more dollars to buy back if it was higher? The way it works to me is if you're writing an out of the money contract, so you're writing, let's say you're writing a GameStop covered call, stock's at 216, you're writing a 230 covered call, and you're getting $10 for it. It's all pretend pricing now. You get $10 for a 230, and the stock goes from 216 to 206 this afternoon, tomorrow, Friday, Monday, or Tuesday after Labor Day. It goes down to 206. Your contract still has a couple weeks to go. It'll drop down to $4, $5, $6. It'll drop off. You buy them back. Let's say the stock hits 205, a daily drop off. You buy them back at $4. The stock later in the day goes back to 210, 212. You write the call again. You might write them at 6, 7, or 8. You write it again. The thing is, though, when you bought it back, what had happened was there were 5, 6 days of depreciation coming in here, time depreciation, on top of the drop of the market. So not only did the stock go down, but the time evaporated away. This is why writing a call on a Wednesday and buying it back the next Wednesday might be a good strategy for some of you guys, because you're writing the call today with 9 days to go. When you buy it back, it only has 2 days left to live. 2 of the days that have passed by are weekend days. You can't do anything on the weekend. It's just time lost. So Wednesday, you write it with 9 days to go. Monday, there's only 4 days to go. Wednesday, there's 2 days to go. This is where time depreciation can really come in handy. Some of you folks are writing calls with 2 or 3 weeks to go. So on a Wednesday, you write a call that has 3 weeks to go. 3 weeks and 2 days. A week later or 2 weeks later, you're buying that call back for way less money, because those 14 days of shrinkage have just destroyed the time value on the contract. It now only has a week, 9 days left to go. It's out of the money, hopefully. It really has collapsed. If you wait 2 or 3 more days, it'll collapse again. You wait till the next Monday, it might collapse yet again. So time is your friend when you're a writer of calls. That's how you play this game. Thank you, everybody, for that. If you'd like to talk to me about a 1 hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.